Hey guys, welcome to the Pot Seat. My name is AJ.
Hello guys, this is Lex. AJ, what's going on today, man? How's the stock market
The stock
reacting?
market was a fiasco today.
So,
So today was the rate hikes, as you can tell. Today was a very volatile day. As you can see, that the whole week going into it, we were expecting good news. Because hey, the Fed is backstopping all the banks. We're getting more security towards the banks, but there's still uncertainty of what the Fed rate hikes was going to be. And today we got the answer. Today they did a 0.25 basis rate hike, which is a quarter point rate hike. So it is officially 5% now on the Fed total rate hikes for basically the year. For one whole year, they did a 5 point basis rate hike, and that's never been done before. So that's something to look out for because the Fed took a move. They were expecting a half point basis point rate hike, but they ended up doing a 0.25 basis point rate hike, which is good news. But then when Powell was talking about what to expect with that, and there will probably be more rate hikes coming soon, that is basically telling the markets that, what, we are trying to fight inflation. And with that, we're going to continue our tightening policy. We're going to continue, you know, monitoring the banking system to see if anything else happens, if anything else tweaks or anything like that. We do have the tools to provide the banks for any failures, and so they can help the depositors. Now, he didn't go into detail of how much and how many people they can insure, so that was like a big thing to look out for.
Yeah. That's a
And
lot of money.
yeah, correct.
That's a
So
whole lot of money they need to have.
I got a question for you, Lex. Do you think
Yeah.
with this rate hike, so that's going to be hitting tomorrow, you'll see a lot of CD accounts, savings accounts, they'll probably go up on their APY. Do you think it's like the right time to, buy a CD? Or do you want to wait for the next rate hike and
Well,
maybe
I
put
was
your
gonna
money
say
on that?
that it depends. I mean, how I would wait for the next one because you just don't know how bad it's gonna get
Yeah. So
and
the
how
next one,
what kind of changes they're gonna be making.
yeah, correct. So the next one is coming in I want to say May. Yeah, May is going to be the next one. Now, I want to share something with you guys. Maybe, we can look at it together, see what the CD accounts are right now. So if I share this screen, as you can see right now, a 12-month is 4.5. A 18-month is 4.75. It matches what it was last before this rate hike. So tomorrow you'll probably see this might increase. Give it a week if it doesn't. Uh Now what does that say? So let's see a 3 month. 3 month rate hike is right now 2%. So a 2% rate hike. Let's see if you invest $5,000 in there, you would get $24, right? Now a 6 month would get you $84. It's 3.4. And a 12-month will get you $224. So if you look at it, the longer you put it, the more money you get out of it.
Yeah.
So putting $5,000 in and then getting $360 after 18 months, it may not seem a lot, but if you're just saving your money, just holding it, you rather hold it in a savings account or a CD account, and you
It's
get,
safer. I think it's
yeah,
safer.
and it's safer. It's insured to 250,000. Um, So going into the market now, the market today was, let's see, let me share that screen to you guys. The market
You know who,
reacted
the
stably.
market that I feel like is gonna be in a lot of pain is gonna be the auto industry.
For sure, for sure.
Yeah.
So today was a very volatile day, as you can see. Now, this is the QQQ. Now let's zoom in closer. So start of the market, you can see basically making its jumps and then dropping. It was basically staying linear throughout the day. Now, as soon as Jerome Powell was speaking, which was at 2 p.m. 2 p.m. Is when when the announcement came out. 2:30 is when he started talking. So as you can see, this right here, 2 o'clock, right? You see, when the announcement came, the market rallied with the 25 basis point rate hike. It rallied because that's what it was expecting. Uh, Now they were all waiting for what Jerome Powell was going to say. And as soon as Jerome Powell started speaking, you can see what kind of damage happened to the market today. That rally from 1% went down to -1%. So you saw a 2% drop real quick. Now, with that being said, what kind of companies were really, really affected? Now, if you go to the bank stocks, like I said, we've been talking about the banking stock. Don't be a long-term investor if you don't know what's going to happen in the future. Even right now, $13 compared to if you go out to what it used to be, 170, that looks like a super amazing, amazing, amazing deal. But then again, now let's show you another stock, SVB, or I think they already took it out. Oh, wait, it was SVIB, which I don't think no longer is showing. Yeah, they're no longer showing that bank. Let's see if Credit Suisse is still there. So this is Credit Suisse. This is what happened to its stock. You know, thing. Maybe you have to go out a month. Sorry about that. So this is the stock that used to be rallying during the 2008 before the 2008 financial crisis. It maxed out at 62 and it never recovered from there. Never recovered. You can see every single time it's been going downhill, 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 downhill. And now they have supposedly a bailout where UBS has bought them out. Uh oh, here you go. This was SIVB. So this is the bank that I was talking about, Silicon Valley Bank, right? We've all heard about what happened to this. So this bank went all the way to $763. And it went down all the way to 200. And that's when, remember, we talked about how Jim Cramer said, oh, it's going to be an amazing opportunity around this point. Oh, they'll make a rebound and everything. All those people lost their money at like 300. It was at actually 340 something, 347 when everybody lost their money now. And it's suspended. It was like trading at like 100. And it was actually trading at 33 before it, really got suspended. So with that being said, is it the right time to invest in the stock market? I would say no, not right now. Till you get a certainty of when the Fed pivots, which means when the Fed is going to pause its rate hikes, that would be a signal to, okay, let's start putting a little bit of money in there. Now, if you want to guarantee, is when they start cutting rate hikes. That's when you actually want to like start putting your money into the stock market again, because that's when it'll start rallying, and that's going to signal that hey, we did enough tightening for our monetized policy, and now we see that we're at a place where we need to be. And then slowly we're going to start cutting it back. So, we can start getting investments rolling in. We can start getting the economy started, because what they're doing right now is they're basically slowing down the economy on purpose, because, they're raising the rate hikes, which means that the banks are going to have a hard time borrowing, which also means that, because they're going to be paying interest on borrowing money. And then, which means that a lot of people are going to start taking their money out of banks and maybe putting it in CD accounts, savings accounts, with that's going to start, start making companies, want to do layoffs, which they already started doing. They're going to start, spending less money on things that, they want to try, like, oh, let's basically put some money in this and, test out this product or test out that product. All that's going to like try to, slimmer down. uh Companies are going to probably go to, like, their main products, their high selling products. They're going to invest more money and time on that. So look for that to be the major uh I guess you could say predicament to get over before you want to invest your money in the stock market. Right now, I would say, hold tight, because when it does pivot, you can make a lot of money as soon as the Fed pivots.
So you said the next increase is going to be until
In
May.
May, that's what the stock market is predicting, is 62 to 66% that they're going to increase another quarter point in May. Hopefully
Do we,
there's no problems that come before that, though.
do we know if is there going to be another increase after May? Oh, to your maybe, what do you think? Do you think they're going to maybe do another May and
Probably do
maybe
another one in
one
June,
more or two
July.
more?
They wanted to stop around 5.75. That was the given. But I mean,
So we
depending
had
on
two
how
more.
inflation reacts to this and how the next CPI data's come, that's very important to look at. If inflation starts coming down, that means the tightening policy is going to work. Now, a lot of people, a lot of economists say that, whatever they raised the 5% bar in 1 year. That was the quickest they've ever done it. And they're saying, even the Fed says that, we don't see the actual effects till, like, 6 months, 1 month, 1 year, or 18 months after they already raise rates. You don't see the economy slowing down or anything like that till, like, after a while.
Right.
So it just depends on how, the next season, winter season, the next, Christmas season is going to come, and how people are going to spend money, see how they see the cycles and the earnings reports of companies, basically. So the next earnings report of companies is going to be very important to see how these last rate hikes have affected these companies. It's going to be very important to see. It's going to be very uh exciting, because you get a lot of opportunities to day trade. If you're day trader, you're very excited. But if you're a long-term investor, this is your nightmare, because you're trying to put your money somewhere, and you're not getting the returns in the stock market as you used to when there was a bull market run. From 2015 to 2022, you were in a bull market. It was a 7-year bull market. And you do get like a year and a half, 2 years of downturn, but that's saying if inflation starts coming down. Now the problems arise, and the problems get worse if inflation isn't coming down and the Fed's still tightening. We're gonna go into like a thing called stagflation. Stagflation is where inflation just keeps rising with a recession already there, which then could lead to a whole nother area, which is called a depression. And we haven't had a depression in a
We don't
hundred
want to
years.
get there.
And that depression is basically when like it's not one area, not two areas where it's slow. It's like almost everything. And they say technology basically advances civilization to stay away from depressions and stuff like that, but it's going to be very interesting to see how, if it happens, how an economy with technological advancements reacts to modern depression and how to prepare for it. So a lot of people say that, hey, save up your money. You don't need that BMW. You don't need that 1,000
Well,
square foot more of a
that
house.
that's what the auto industry comes, and cars are going to be more expensive now. At least the car payment.
Car payments are at a record high. Credit card debt is at a record high. Home loans are still stabilized, but it could get there with if people start buying new homes with higher rates. It rises up.
Yeah, we will see what happens. Hopefully, let's go ahead and expect for the best.
Yes, sir. Well, if you're looking to your market analysis of tomorrow, look for right now, the futures are suggesting that we are up right now. If we share the screen, Dow futures are up 0.42%. SPY is up 4.5%. Nasdaq is up 0.5%. So if we're looking into the futures, it's up, but don't get excited because before pre-market, that's when people start to react. Futures, if you play futures, you'll understand why, because there's a major drop, so a lot of people like to play futures and risk the green in the beginning, but when it gets toward to opening market time, it tends to drop. So look for a little drop in as soon as the market opens. Maybe you'll see an upward trend, but then it might go downwards, and then overreaction to the drop might cause it to stabilize throughout the day. So I'm looking for a little red tomorrow in the market. What do you think, Lex?
Well, I hope it is what you say. It's going to be. Uh, it depends how these banks are also. We don't even know. There might be a secret that we don't know about a bank, and boom, we're gonna hear something new this week. Hopefully
Yeah.
not, but it might happen. Also, I just want to share with the viewers, AJ, that do your own homework. Don't make a decision just by what we are telling you right now. If you're going to invest,
No, not
do your own
financial
homework.
advice.
Yep. But yeah, hopefully it's going to be good news tomorrow for a lot of people. Stock market is going to be good.
Yes, sir. I think it's gonna be bad. You want to make a bet on it?
No,
I'll
not right now.
shave if it's a green day. If it's a red day,
I'm not shaving. I'm not doing anything. Let's make a
ah,
bet. Let's make a bet.
okay.
If you lose, I win, obviously. And if I win, you lose. So either way, you shaving.
What?
Yeah,
No.
you heard me.
If I'm trying to make my beard grow, so that's why I know if I'm right, my beard grows. The money grows. So I'm gonna think it's gonna be red tomorrow, and
Okay.
it could be big red if you might see a little spike, but if it starts going down, it starts going down more than a percentage on the Nasdaq, and you don't see it come back over a percent, then it could be a really red day tomorrow because there could be fears of other banks and other things like you said.
Some of the exciting things are gonna come, and we're gonna put a bet on that. But I'm not shaving. If you won, it's on you. But Not right now, because I know something
So
juicy
if I
and
win,
better
what's
is
gonna
gonna
happen?
come.
If I win, what's gonna happen?
If you what?
If I win, what happens?
If you win,
Yeah. Ah.
that's what you're gonna get.
All right. All right. I'll take it. I'll take it.
I'm gonna give you 2 claps right now, maybe 3, and I'm gonna give you the rest of it when you win. That's what I'm giving.
All right, guys. Like, share, subscribe if you find this useful. We'll come up with better content every other day. We'll give you market analysis and up-to-date content on what's happening in the financial system. Thank you and goodbye.
Thank you guys. Take care.